Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate filings into something you can actually understand. Today we're diving into a report that might seem drier than a week-old bagel, but stick around because hidden inside are clues about whether this fund is making smart moves or just shuffling deck chairs on the Titanic. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss corporate finances with other smart people. We're looking at the semi-annual report for the Cook and Bynum Fund covering October 2024 to March 2025. This report tells us how the fund performed, what it invested in, and basically if it's worth your money. Was it a roller coaster or steady climb? Let's find out. First things first, let's talk about costs. Imagine you invested $10,000 in this fund. Over the last 6 months, it would have cost you about $75. That's like paying 149% of your investment just to keep it there. This number, called the expense ratio, is annualized, meaning it's what you'd pay over a full year. So what did you get for that $75? Well, the fund had a positive return of 2.34% during this period. That sounds good, but let's compare it to something else. The MSCI Due Net Total Return Index, which is a benchmark for global stocks, returned negative 230% during the same time. So Cook and Bynum did better than the overall market. They credit the fund's positive results to good performance of Arca Continental and Berkshire Hathaway stock. Let's get a broader look at the fund's long-term performance. A fond of performing to 2%. Looking back 5 years, the average annual return was 11 Angie 3 SCI. Now, to put these numbers in context, let's see how it stacks up against our benchmark, the MSCI ICPAN Net Total Return Index. That index returned 7.11% over 1 year, 15.17%. Now, to put these numbers in context, let's see how it stacks up against our benchmark, the MSCI Net Total Return Index. That index returned 7.11% over 1 year, 15.17% over 5 years, and 8.84% over 10 years. Over all 3 periods, the Cook and Bynum Fund underperformed the MSCI. Keep in mind, past performance doesn't guarantee future success. Alright, let's peek at some key stats. As of March 2025, the fund's net assets totaled about $72.6 million. They're holding 14 different investments, and the total advisory fee paid to the people managing the money a hefty $300 hefty $311,694. The portfolio turnover rate is 1%, meaning they didn't do a lot of buying and selling of stocks in the fund during this period. What exactly is the fund invested in? A big chunk of their money, 28.4%, is in Arca Continental. This is a major Coca-Cola bottler in Mexico. Another 23.47% is in Berkshire Hathaway, the company led by Warren Buffett. Anheuser-Busch InBev, the beer giant, makes up 10.87%, and Coca-Cola Embona is 1.80 Busch InBev, the portfolio. So we see the fund is heavily invested in the beverage industry. Let's look at the fund's schedule of investments. This shows all the holdings. They have about 87.6% of the fund in common stocks, a little over 10% in preferred stocks, and a tiny bit in short-term investments, in this case US Treasury bills. It's again beverage giants Ambev and Anheuser-Busch are large common stock holdings in the fund's portfolio. Berkshire Hathaway also accounts for over 23% of the fund. They also own preferred stock in Coca-Cola Embona. Now let's glance at the statement of assets and liabilities. Total assets, $72.7 million. Total liabilities, a much smaller $139,802. That leaves net asset value per share, which is basically the price of one share of the fund, is $16.92. What about the fund's earnings? Total investment income came in at about $404,003, but expenses like advisory fees add up to $713,197, $12,357. Ultimately, after accounting for gains and losses on investments, the fund saw an increase in net assets from operations of $1.37. Ultimately, after accounting for gains and losses on investments, the fund saw an increase in net assets from operations of $1.3 million. This shows how the net assets have changed. From October 2024 to March 2025, net assets decreased by about $4.1 million. That's because although the fund had an increase from operations, they paid out distributions to shareholders and had net outflows due to more shares being redeemed than sold. The fund ended March 2025 with $72.6 million in net assets. The fund began the period with a net asset value of 16.77 per share and ended at 16.92 shares. The total return for the period was 2.34%. Expenses of fee waivers were 1.49% of average net assets. The portfolio turnover rate was very low, just 1%. Okay, let's skim the notes to the financial statements. These notes explain how the fund does its accounting and any important details. The fund is a series of the World Funds Trust. It aims for long-term growth of capital. The fund values its securities at market price, using different sources depending on where the security is traded. They use fair value pricing if market prices aren't readily available. Cook and Bynum Capital Management is the investment advisor. They get paid an annual fee of 1.49% of the fund's daily net assets. The advisor has agreed to waive fees or pay for expenses to keep total annual operating expenses from exceeding 149%. During the 6 months ended March 2025, the fund bought 2 Townsend $80 and 516 Utand at the fund 116. Distributions to shareholders are recorded on the ex-dividend date. The fund intends to distribute all of its taxable income to shareholders. During the first 6 months of 2025, the fund sold 166,452 shares, reinvested 59,592 shares, and redeemed 592 shares, and redeemed 511,112 shares. The fund has a line of credit with US Bank National Association for financing redemptions. The borrowing limit is the lesser of $7 million, 10% of the fund's market value, or 33.13% of the net market value of unencumbered assets. The fund didn't borrow anything on this line of credit. Here's a key risk. The fund is non-diversified, meaning it invests more of its assets in fewer companies. This can increase risk. Also, they invest in foreign securities, which brings risks like currency fluctuations and political instability. Alright, time for the letter to shareholders. This is where the fund managers explain their strategy and how they see the future. They start by highlighting that the fund returned 230%. The fund believes there's a big opportunity in Mexico, Turkey, Chile, and Peru. They note that these countries are trading at a significant discount compared to the US market. This makes some of their valuations nonsensical in their point of view, and so they concentrate their holdings there. The managers discuss the potential impact of tariffs. They believe their companies are relatively well protected, but they're wary of rising costs and economic challenges. Now they dive into the topic of artificial intelligence. They believe AI is undergoing rapid evolution and commoditization. They highlight the importance of proprietary datasets and the growth of AI-driven applications. They see both opportunities and risks in the AI landscape, requiring expert CEOs to navigate this area. So what's the story here? Cook and Bynum had a slightly positive 6 months, outperforming a falling global market benchmark, but it hasn't been great at outperforming its market for longer periods of time. The fund is very concentrated with a lot of money in beverage stocks and a significant chunk in a few specific countries. They see value in Mexico, Turkey, Chile, and Peru despite the risks. They're also keeping a close eye on artificial intelligence and how it could disrupt various industries. The fund is not diversified, so be aware of that before investing your money. And alright, that's our breakdown of the Cook and Bynum Fund's semi-annual report. What's your take on these numbers and what they signal for the company's future? Drop your thought in the question for investing. It could disrupt various industries. The fund is not diversified, so be aware of that before investing your money. Then alright, that's our breakdown of the Cook and Bynum Fund's semi-annual report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.